Okay, Michael, your speaker's just on mute right now, but you are on stage.
Okay, can you hear me now?
Yeah, that's fine. Did you catch my question, or should I repeat it?
Let's just talk about the market. So,
Yeah.
I mean, we're going through a big deleveraging right now, and I think it's like just the final gasp of the deleveraging that we've experienced, that started with the Terra Luna meltdown. So, I mean, the way I look at it, I mean, the primary macro driver here, right? The wrecking ball is the US dollar. And the US dollar about a year ago had a 1 year interest rate of 14 basis points. And right now it's about 461 basis points. So the cost of capital in the entire macroeconomic system has been skyrocketing at the fastest rate in 40 years. And money that was effectively worthless a year ago is now generating 4.6% interest risk free. And so that's put lots of pressure on all the markets. And the first thing to break was Terra Luna. And, and that led to the meltdown of the early hedge funds like Three Arrows. And that collapsed the poorly managed crypto banks like Voyager, Celsius, and BlockFi. And it turns out also Genesis took a huge multi-billion dollar loss at that point. They were all long on a bunch of, in essence, crypto tokens backed by nothing. And so as those tokens crashed, the most famous one being the $60 billion Terra Luna ecosystem, as they crashed, and then everything else crashed, and Bitcoin got drawn down with it. So around then, maybe 4 or 5 months ago, it looks like Alameda also lost $2 to $4 billion, drilled a hole in the ground, but FTX covered up the loss, and they covered up the loss with customer funds. And so Sam found himself owing a lot of money to some of these players, like he owed money to Voyager or BlockFi or other players where he had borrowed from them through Alameda. And so his solution was repurpose customer assets to cover the hole secretly. That's illegal and unethical, but he did it through a back door. And then he went kind of on a PR spree and an acquisition spree to try to buy up more assets. So the diabolical nature of this thing is he uses his own bank's assets, FTX's, to meet his trading losses, and then he buys up other banks with assets so that he can maybe get his hooks into those. That held off the collapse of Alameda for some number of months. But you could see there was stress there, right? Because when the CEO of Alameda left, Sam Trabucco, there's always an issue of like what happened there, right? And that happened in August. And then, of course, we saw the CEO of Genesis left. So lots of executives left. We roll the ball forward. And meanwhile, FTX totters with this FTT token. And when the FTT token came out, and it was pretty clear that the entire Alameda balance sheet was constructed of air tokens between FTT and Surum, we were kind of in a powder keg. And the powder keg got lit when CZ announced that he was going to dump FTT. And when that happened, then people started putting two and two together, and they realized that there was something amiss here. And that's created like this maybe third round of contagion, right? Maybe fourth round. If the first round was driven by the Fed jacking interest rates, and the second round was driven by Terra Luna's meltdown, the third round was driven by the collapse of Celsius and Voyager and BlockFi. This is the fourth round. And it's like a retching deleveraging of the entire crypto ecosystem. And now we can see a little bit of that contagion, right? Because FTX goes down, Alameda goes down. Anyone that loaned money, loaned anything to Alameda, they're going to see their loans go bad. All the investors in FTX, right, get wiped out. All the counterparties and business partners of either Alameda or FTX get wiped out. And now that ripples, right? Because presumably we know that Genesis had some exposure to Alameda. We'd known it was 175 million as of a week ago, but apparently if Genesis has stopped processing requests, and they were one of the largest OTC crypto trading desks, then they have some contagion. So who was tied up in that? And this morning you're hearing that Gemini had exposure and they were using Genesis to generate their yield product. And of course, Grayscale just put out a tweet announcing that they don't have exposure to Genesis, which is a logical question for people to ask. So that's what gets us here.
It seems to me that the more details that emerge, the more and more sinister the entire operation appears to me. But I guess looking back in hindsight, it's quite easy to construct a narrative about what was so obvious. But back then, did you see any red flags that made you question their operation? Because I have to put my hand up and say, I thought they were legit. I thought they were a legitimately successful operation without having done any kind of due diligence, because it's not my business to do that. I had no involvement with them and had never done any business with them. But did you see any red flags that perhaps you thought were a little bit off-putting back then?
Yeah, I think we got a few, quite a few. First of all, as you know, from the point that I got into this business, August 10th, 2020, we looked at 20,000 cryptos. We decided that Bitcoin was the most ethically sound, technically sound, economically sound asset. Then we looked at every other asset and we basically concluded they were all defective. They were either defective economically, defective ethically, or defective technically. So our initial investment decision was 100% Bitcoin, 0% everything else. Well, so that was pretty clear, and people have hammered me on that for 2 years, and I've kept pointing out, right? There's only one investable asset in the space out of 20,000. But the other thing that may not be so clear to people is, as a publicly traded company, we went through due diligence, and the number one issue is, how are you going to custody and store your Bitcoin? And of course, if you're an individual or you're a small company, you can probably self-custody or you can multi-sig. But if you're a government or an institutional investor or a publicly traded company, my public investors don't want me walking around with the Bitcoin. There's no way you want anyone. We never do anything where there'd be any one point of failure or even multiple points of failure. So we have to find an institutional grade custodian, that you can do cold storage with. And if you start to look through that, you say, well, who's an institutional grade custodian? You might get comfortable with a Fidelity. You might get comfortable with somebody with trillions of dollars of assets that's licensed in the U.S. That's been in business 50 years. That has armies of lawyers and accountants and a lot of controls. Any publicly traded company has Sarbanes-Oxley controls, and they do intensive security audits, intensive compliance audits, and the officers, the officers of a company in a regulated industry have civil and criminal liability jointly and severally for everything that goes on. And what that means is every quarter, when I sign my financials, I sign a Sarbanes-Oxley statement if I'm the CEO or the CFO, and that is an attestation that everything reported is correct, and that includes not just all the balance sheet, all the P&L, but includes all the underlying Sarbanes-Oxley controls, and you are required to report if you have a lapse or a deficiency in a control. And a deficiency in control could be something as subtle as the 98th person in the IT department had the ability to grant or revoke privileges for 37 minutes to access one piece of data in the company. And in a controlled company like that, I've met people, I've seen people in banks, senior executives, and they were fired because for 30 minutes it was possible for a privilege to be granted that was never granted, that would have been tangential to something that is secondary to something that is primary, and it ends your career. So there's a certain culture of control and transparency in public regulated entities, especially in the United States. And the highest degree of those controls are with publicly traded entities that are regulated. And the culture is such that, even a small company like mine, and we're not even a bank, we have more than 100 lawyers and accountants inside the company staring at this stuff. And then we have outside accountants, and then we have another set of accountants staring at the first set of accountants, and then we have another set of lawyers, and then another set of lawyers staring at those lawyers. And so there are a lot of belts and suspenders in well-run, or at least in institutional grade companies in the regulated market in the U.S. And so we look at offshore exchanges, and our conclusion is, if you had everything perfect, we would have to go back and look at, if you had every perfect check the box thing, we would go back and audit 3 years of your financials and your auditors before we would trust you as a counterparty. And it might take a year for us to actually decide to trust you from the moment that we started assuming everything was perfect. Well, you look at FTX, and they weren't publicly traded. They didn't have a CFO. They didn't have any of these controls. They weren't even subject to those controls because they're offshore. So you couldn't in a million years get comfortable with them as a counterparty based upon any degree of responsible jurisprudence in the U.S. And so that's the first red flag. The second red flag, right, is that they were just jurisdiction shopping, right? I mean, Sam started out in Hong Kong, and then he moved through Singapore, and that didn't work. And eventually they found one place on the planet, the Bahamas, where they might set up. And they hastily set up there in a matter of months and came in, kind of really fast. And so that's a red flag. I think the turnover at Alameda is a massive red flag. But to make the obvious point, you can't run a hedge fund while you also run a bank and then have them co-located. That's just an ethical red flag, and anybody could see that. You're trading against your customers, and the fact that Sam was the controlling shareholder of both of them is is conflict of interest. You couldn't have done that legally in the U.S., and you couldn't take a company public like that. So, Archie, let's just step back and talk about what really happened at FTX real quick. I mean, in the greater scheme of things, and hindsight. FTX is Alameda. Alameda's a hedge fund. They make a little bit of money trading, and then they start an exchange. And the exchange is, in essence, a crypto bank. Okay, and then they launch a banking token, FTT. Well, the token is an unregistered security and it's backed by air. Right? It's a ERC20 token. It's backed by nothing. And so then they actually start to promote another token and launch another one, Serum, SRM. These are two made up air tokens. Now, what's the value of them? Well, the value of them is only trading in the market. So if I have 100 million tokens and I let 1 million of them trade, if I actually run my own exchange and I trade with 20 to X leverage, then you can see how you start with $100 million asset and $1 million trading, and then all you need is $50,000 in order to lever it up, and you get the price where you want. But that would be if you were honest, right? You could use $50,000 to create $100 million in market cap. But if you're not honest, you just borrow assets from your customers on the exchange, use their assets to lever up your token. So I think at one point they said 93% of FTT was controlled by the top 10 owners, but probably Sam, there were 2 or 3 people that were the top 10 owners. So they had an air token, they levered it up. First, it was levered up 100 to 1 or 50 to 1 because most of it didn't trade. Then they used leverage in the exchange. Then they could do wash trading, and they wash traded it. And then they placed the token into the hands of Alameda. So Alameda is now holding billions of dollars of these air tokens. Now what do? Well, if somebody's foolish enough to loan you money against your air token, right? Would you, if you're foolish enough, you take the loan. So of course they take the loan. But most people aren't foolish enough. I mean, the ones that were got wiped out, right? And the 3 arrows, crypto hedge fund guys were the foolish enough to do this kind of stuff. And the reason it worked is because, well, FTX is famous, and Sam had this reputation as a swashbuckling super quant trader. And people thought, well, if Alameda and Sam's behind FTT and Serum, then I'm just going to get on the bandwagon. So people kind of get on the bandwagon. But what happened was that's insider trading, by the way, right? When you own the thing and you trade the thing, and then you use leverage to trade the thing, it's a security, but it's an unregistered security. So it's illegal to do that in the U.S., right? I mean, in the U.S., if you read a proxy statement, you would disclose who owns everything, and you can't lie about it. But what was going on offshore was they were basically doing insider trading on an unregistered security to create a $14 billion market value. Now here's where it gets diabolical. Then I basically take some of the money, right? What do? I post the token as collateral. Like most Bitcoiners think that the diabolical idea is I dump this on retail. But Archie, that's way too slow because it was only trading 30, 40 million a day with wash trading. So if you basically dump it on retail, you get 10 million or 5 million a day. It takes you a year to get $1 billion out of a bogus asset if you're dumping on retail. That's not how you do it. Sam came up with a much more diabolical way to do it. He just posted the 14 billion in collateral. He told himself that it had a value of 14 billion. He marked it down by 50% to be conservative. And then he gave himself an $8 billion loan. Okay, what bank would give you an $8 billion loan against 14 billion of air? Well, no bank in the real world. But if you owned the bank, if you were the CEO of the bank, and you could by the way, no board of directors would have approved this either if FTX had a board of directors, and no compliance officer and no adult would have approved this. But there's no adult CFO, there's no board of directors, there's no auditor, there's no outside bank. So Sam applied for a loan from FTX using Air Token, and he gave himself the loan. But because it would have been so egregious if the world had known it, he just kept it secret. And he just wired the money to Alameda, first $4 billion. And then what do you do with the money? Well, I buy stadium naming rights, and I buy celebrities, and I buy politicians, and I buy Super Bowl ads. And then what was going on there was securities fraud and accounting fraud at the same time, because the securities fraud is like insider wash trading on your unregistered security. The accounting fraud is they jacked up the value of FTT to maybe 3 billion, and then they kind of quietly gave themselves 4 billion of locked FTT, which is like treasury stock, and then they marked up their balance sheet to 7 billion. It's kind of like if I invented, a stock, and then I secretly agreed to give myself 500 million more shares of it, and then I put it on the balance sheet, and then I ran a bank, and I went back to the bank and I said, I have $8 billion of assets, and give me a $4 billion loan, and I'll take that in dollars and Bitcoin. Okay, so what was going on here was all manner of financial malpractice, but the kind of evil part of it is that for it to work, he wasn't dumping the token on unsuspecting retail that are stupid enough to believe the FTT is worth anything, right? We could all figure that out. What he was really doing was stealing the Bitcoin and the dollars out of his own bank. People that thought they owned Bitcoin and they thought they owned stable coin or thought they had dollar deposits, they found that he was taking those assets. And he's like, I think he had a famous, he had a great line that he gave to the New York Times. He said, Alameda had a large, quote, margin position, unquote, on FTX. He called it a margin position. But what that means is I posted $14 billion of air token nothing that I made up. And then I took $10 billion of real stuff from my customers. And then I spent it. And of course, if you're spending it, everybody thinks, wow, FTX is great. I'm gonna put money into the bank. And then he went off and he showed some bogus financial statements. And that's how he raised $2 billion of venture capital. And the venture capitalists were irresponsible. They should have done due diligence and established adult supervision on the board, but they didn't. And and people putting money on the offshore exchange, it's like, would you do that if you're an institutional investor in the U.S.? No way would you do it. Like there was never a moment when I thought, if I tried to put money with FTX, my board of directors, my auditors would have fired me, right? Like it's not happening. But even then, like, why would you ever put money with FTX? What they did is FTX attracted money and they attracted capital with a couple of interesting techniques. They set their fees super low. You remember Sam used to brag about it, super low fees. 1/10. He was like, well, we only charge 3 basis points. Okay, you know why he charged? Now you know why he charged such a low fee, because he wasn't going to make money on the fee. He was going to steal your money. Right, that's why he did it. So that must have torqued off Binance and bothered Coinbase and all the other crypto exchanges. It's like you've got a competitor that's basically charging no fee because he wants the assets on the platform. Then he listed lots of tokens that are illegal to list in the U.S. because they're unregistered securities. Then they had the motto, built by traders for traders, trader mentality. Then they offer you mega leverage. It's illegal to offer more than 2-to-1 leverage in the U.S. market, and of course they're offering 20-to-1 leverage. And then he bragged about cross margin accounts, like you can cross margin everything to everything, and he combined that with weak controls and the Alameda conflict. And then he was an aggressive trader, and he talked about crypto tokens, and all the crypto bros thought, well, if we just get in line with him, we can trade on him, and we know that he's going to lean on this thing to get it up, so we'll get a piece of the action. And then he just add this last piece, very acquisitive, right? Go buy up all these other crypto banks and then roll their assets into yours. And the big picture is acquire assets so you can misuse them. And ultimately, how does it play out? He's so sloppy in his words and the way they treat things, like characterizing the fact that you stole $10 billion of your customer money as a quote, we had a large margin position that was substantially larger than I had thought it was, unquote. And in fact, the downside risk was very significant, unquote, right? Is it is indicative of all the delusion in the crypto industry in general. And the delusion in the crypto industry has traditionally been, I can manufacture an air token, I can name it after some strain of a dog, I can pump it on Twitter, and then it's good money. And again, the great degenerate play here, though, it's generally degenerate to what I just described as a pump and dump scheme of a penny stock, right? It's degenerate to do that, but it's particularly diabolical to pair it with the bank such that he never intended to dump it on the retail population. He just intended to take real assets out of the bank, under the faux fiction that he was quote unquote borrowing them against fake assets. And that, of course, is he never could have basically dumped $10 billion worth of FTT and SRM on the market, but he could steal $10 billion worth of Bitcoin and cash and everything else out the back of his own bank. And so that is where we are today. And what's the significance? It's just so egregious, Archie, that obviously it's criminal. It's kind of like combining one part Jordan Belfort pump and dump boiler room with one part Bernie Madoff made up assets with one part Enron, manipulated, random, fake, corporate, dissembling off balance sheet. And you put them all together, and this is really it's the defining moment for crypto in this entire meltdown.
Michael, you mentioned that the lack of controls, and that was a red flag for you, and also the nebulous corporate structure was an obvious red flag for you as well. What does that say about some of the famed VCs and investors who were also similarly were in touch in close proximity to FTX and either didn't pick up on these or saw what you saw and overlooked them?
I just think there's a lot of people trying to take shortcuts. It's a combination of greed and laziness and intellectual weakness, right? The fact that you would put $200 million into an offshore exchange and not do diligence, not provide reasonable corporate governance, and not require a board seat, right, is just ridiculously sloppy.
Or even put pressure on the formation of a board.
There's nothing right about it, right? It's like a lot of people have made fools of themselves in this, and although it's really painful, like it's painful and tragic, so many billions of dollars have been lost. And by the way, I kind of divide it into two categories. There's the people that should know better, right? Which are well backed, well educated investors in the Western world. Both the venture capital investors, they should not have put the money in the company. And then people that loaned FTX money, right? There's loaning anybody money against an unregistered security. It's unethical. It's foolish, right? And it's it's dysfunctional, right? So they shouldn't have loaned him money. They shouldn't have invested the money. And then people that traded on the exchange, they were trying to get around some rule. Like they wanted to trade, an unregistered dog coin security or something, or they just wanted, it's like it's very obvious. I can tell you, Alameda using billions of their own money trading the FTT token, that is unethical securities fraud, right? That is insider trading and securities fraud. That in and of itself, if you wanted to get into that, you were just a conspirator to a securities fraud, right? So that's bad enough. Now, if I told you that Alameda was going to steal $1 billion of FTX customers' money and engage in the same insider wash trading, right? That's the part you didn't know, but you already knew that Sam owned Alameda and owned FTX and had launched FTT, and FTT was an unregistered security. And the way you knew it was he was sitting in the Bahamas and he couldn't trade that stuff, right? It should be obvious. Coinbase doesn't have a Coinbase token because there's just nothing ethical or legal about issuing the token, right? Coinbase has a stock. You can trade it on NASDAQ. It comes with 1,000 pages of disclosures on it, right? It's got a CFO and a CEO, and they signed the Sarbanes-Oxley statement, and they're civilly and criminally liable for their representations. And they can't just print another 20 billion worth of the stock. And so people that were trading on the exchange that should have known better, they kind of got caught by this. But on the other hand, there are a lot of innocent people. I'm sure there are innocent people. For example, What if you didn't live in the US? What if you were using FTX because you lived in Argentina or Venezuela or South America or Africa or Asia or some country, or you were not able to get access to the banking system? Those people were using it to get a Bitcoin, or maybe they're using it to get stable coins. And if you were using it in order to escape hyperinflation in Venezuela, it was a life raft for you. And so those people are the innocents that are really kind of hurt by this. And so yeah, that's sad. I think ultimately you end up with a lot of innocent people hurt. You have a lot of people that didn't know better, but and then you have like the routine mainstream. Maybe some people just thought they were doing business with FTX, and there's a whole set of influencers that have egg on their face right now. Um, but I think it's a defining moment for the crypto industry, because what Bitcoiner's been saying all along, and what I've been saying, right? What the chair of the SEC has said is the vast majority of crypto tokens are unregistered securities. Okay, that's the most politically correct, kindest way to say it. But the more colloquial way to say it is they're all unregistered securities. It's unethical to promote them. It's illegal to trade them. It's securities fraud, right? That's what's going on here. Starting with Ethereum, working your way down to every other token. If it's not truly decentralized, if it's not an asset without an issuer, it's a security. If the developers control it, it's a security. If there was an ICO, it's a security. If there's a pre-mine, it's a security. If your tokens are locked up in custody, like with ETH, it's a security. You're waiting. It's an investment contract. You're waiting for someone to give you your assets back, right? And so this is a very expensive education. At this point, the smartest guys in the room, right? The Three Arrows Capital guys, all the crypto hedge fund guys, they are all getting wiped out. And they're getting wiped out because they're playing with fire, and they've been trading unregistered securities backed by nothing on unregulated exchanges. And what the chair of the SEC has said over and over again, if you've listened to his testimony in front of Congress for the past year and a half, as he said, people trading in these markets don't have investor protections. The exchanges are not trustworthy. They're not transparent. They're trading against their customers. The assets they're trading, with the exception of Bitcoin, are securities, but they're not registered securities. And that means there's no disclosure. And that means, lo and behold, if I told you Sam controls, there are two people that control 95% of the supply of FTT. You think it's worth 3 billion. It trades 30 million every day. But in fact, it only trades 3 million every day because 27 million is wash trading. And by the way, the 3 million is traded, between FTX and Alameda back and forth. They trade it themselves. And if anybody came in to sell the 0.1%, Sam would just steal $100 million from one of his customers, buy it all back, pump the price up. And then guess what? He then secretly issued himself 4 or 5 billion more of it that he calls like locked FTT. And then he thinks he's got 8 billion on a secret balance sheet. And he just granted himself a $5 billion loan of Bitcoin against his customers' Bitcoin against a secret balance sheet. And there's only like 4 people in the world that know this. Okay, that's the situation at FTX. That's the situation with an exchange token. The only difference between an exchange token like FTT was FTT included accounting fraud, insider trading, and securities fraud. And if you ran the most ethical offshore exchange you could, you've just got the securities fraud. Like that's the best it gets, and all of it not good. So what happens next is, well, all of the, the guys that wear the suits and the tie, they're the smartest guys in the room that have been pitching crypto, are all getting wiped out right now, and they're all getting disgraced, and embarrassed. And I think it's ultimately it's a little bit of it's a pain for Bitcoin in the near term, but it really is an inflection point for Bitcoin and the crypto industry in general. Because what it does is it proves Gary Gensler is correct. He's been right all along. He's called it all along. The crypto exchanges are operating without proper investor protections. They are trading against their customers, right? Archie, this has stopped a lot of bad legislation that was working its way through DC. A lot of the crypto industry and a lot of the lobbyists were pushing for very light law and light legislation that would have put light regulation on the crypto industry, would have allowed them to still masquerade as commodities and not securities, right? And I mean, the bill in front of the Ag Committee, it would have designated Ethereum as a security and Ethereum's, as a commodity. And Ethereum's obviously a security. Anybody could figure out it's a security, it's an investment contract. There really isn't any legal or ethical or technical argument for it to be anything other than an investment contract, especially following the merge. And so that was like quite a monstrosity. And the fact that the crypto industry, wanted to duck this issue was a problem. Sam was using stolen counterfeit money to lobby in DC. And in fact, you could say there's a lot of stolen. Sam was special. His was stolen counterfeit money, but there's a lot of just counterfeit money from the crypto industry that has been used to lobby in DC, to lobby politicians, to buy Super Bowl ads, to buy, to bend academics, to bend journalists, to corrupt the political process. And it was, Sam was the poster boy of that. And now that he is blown up, it caused a lot of that legislation to be dead on arrival. People said, "Wow, this was being proposed by a fraudster con man who was obviously manipulating an unregistered security. Maybe we got to go back and stop and think about this a bit." And it's going to strengthen the SEC, right? It just punctuates that these are all securities, and it's going to strengthen the SEC. And Gensler said two things: he wants the exchanges to be registered and regulated, and they're going to get regulated because they need to be. Because if they're not regulated, you see what happens. And he wants these assets to be registered, and I think that's kind of an inflection point. That's where we are right now.
So during this bear market, I've noticed that the companies that are blowing up tend to be the ones who are trying to emulate the privileges and the functions of the traditional finance market. And then on the other side of that, we've got a bunch of retail customers, mass market, whatever you want to call them, who have an ever-present appetite for speculation, for yield, and for not custodying their own assets. How do we overcome that? Because I don't see that regulation will stop the first part of that equation. And the second part seems to just be an inherent part of human nature.
Well, the FTX blow up, I mean, probably FTX is going to destroy about $15 billion by itself of its own, of the assets of its investors, its creditors, and its customers. But it's blown out $150 billion out of the entire crypto ecosystem. If you could look at the $5,000 drawdown in Bitcoin, right, there's $100 billion right there. And so it's a very expensive, painful educational lesson to every crypto investor, right? And the lesson is, don't trust air tokens, don't trust a shady exchange, don't trust any custodian that you're not sure of. look, I mean, the hardcore Bitcoin maximalist point of view is, you have to self custody, and I endorse that and support that for people capable of doing that. But 85-year-old retirees are either not capable of doing that, they can't physically do it, or they can't legally do it because their assets are in an IRA or they're in a retirement fund and they're locked up and they can't legally do it. And so the world is full of people, institutions, governments, corporations, and certain demographic. They have to rely on trusted custodians. And in that case, like Fidelity or a regulated bank in the Western world that's got massive amounts of accounting and legal oversight, and where the officers have civil and criminal liability, and they have very elaborate controls. Those are the right solution. So I think at this point going forward, you're going to see two dynamics. Well, one is free market education. A lot, Saifuddin pointed out one of his podcasts. He was somewhat gleeful about it. I'm not so gleeful, but he pointed out that everybody that trusted FTX has been wiped out and they've lost their capital, and therefore they can't keep doing this, right? Well, the crypto hedge funds have been discredited. The crypto VC have been discredited. The crypto offshore exchanges that are unregulated have been discredited. The crypto air tokens have been discredited, and they're not just discredited, in the crypto industry, right? I mean, the average person's going to look at this and say, well, how is your token different than FTT and FTX? But they're also discredited with lawmakers, Congress people, senators, policymakers, lawyers, the mainstream media. This has been it's a massive teaching moment, a massive educational moment. I think I counted like 5 stories on the front page of the Wall Street Journal each day for the past 5 days on this, right? So we used to lament no one covers the industry. Everyone's covering the industry. This is taking up all the bandwidth across Twitter, all the bandwidth on CNBC and Fox, all the bandwidth, in the Wall Street Journal, all the bandwidth in Bloomberg. So it's massively educational. And there's one point that Bitcoiners been making forever, right? It's like there's a difference between Bitcoin and these other crypto tokens, and and we're still not there yet. There's still a lot of people that say, "Oh, this is all crypto." But I feel like we made more progress in the past 2 weeks in establishing the difference between a proof of stake air token and a proof of work network in Bitcoin than we did in the previous 2 years. So I think that's part of it.
Are you
The other
getting a
thing
sense
is,
that that is change? Sorry, Michael, to interrupt
yeah,
you, but are you getting a sense that we are making progress on that front amongst sort of the more influential spheres of society?
yeah, absolutely. Absolutely, right? I mean, a lot of people are looking at this, right? And a lot of these charges are going to be securities fraud, right? And so you're going to have the most visible crypto securities fraud case in the history of the industry, right? We saw the library ruling, and the library ruling, which some people weren't paying attention to, was a crypto token, with an ICO, turns out to be a security, right? And the implication is, well, any pre-mine, any ICO will all be deemed as securities, and that's festering. This is going to be a much more visible one that people can't take their eyes off it. The Wolf of Wall Street was a successful movie. This is going to be the king of crypto. There's going to be a movie. There'll probably be 5 movies made on this thing. It's going to be mega, and it's going to educate everybody in the world as to why you wouldn't trust a random entrepreneur making up their own token, and why people shouldn't be able to create their own money. I think the other point to be made, though, is there was a big political fight and a gridlock in DC before this point, because I think the crypto lobby and Sam in particular, they were fighting against the SEC, and they were pushing back, trying to undermine the SEC in order to drive their commodity narrative. And I think that with the collapse of FTX and the collapse of FTT and all of these tokens, it's pretty clear the people that were supporting that movement have been embarrassed, and now they really can't push that so hard. So at this point, we're going to see Gary Gensler and the SEC as the quarterback in the driver's seat, and this is going to get driven much more rapidly toward a different result. And I think the result is the future of the industry. The future of the digital assets industry is going to be registered assets on regulated exchanges, and what that means is if you want to trade Tether or Circle, they're going to need to be registered, and they're going to be registered as digital currencies. And then there's going to be a set of disclosure rules around them. You have to publish your assets. There's going to be rules and rails. You have to publish your assets. It has to be treasuries, no more than 1 year duration. You have to publish them every 12 weeks. You have to publish your board of directors. You have to publish your balance sheet. You have to be audited by, a big four accounting firm. You have to sign a Sarbanes-Oxley statement. You have civil criminal liability for lying, right? And then people can decide if they want to own that thing. There's another class of assets, digital commodities. There's only one we know of right now, Bitcoin. Someone might file an application to get Litecoin designated as a digital commodity, right? Presumably the SEC would look at it and say, who owns it? And does anybody control it? And is it decentralized? And is there an issuer, right? And can you manipulate the supply? And at some point they would either say yes or no, right? There, out of 20,000 cryptos, there might be half a dozen or a dozen that might be able with a straight face to apply for digital commodity status. If you applied for digital commodity status with Solana, the SEC would say, you got a CEO, you had a pre-mine, you've got an ICO, if you want to be a digital commodity, here's how you do it. You basically disband your company. You contribute all of your tokens and your treasury pro rata to everyone that bought in the free market. You disclaim beneficial ownership of it. You unwind the ICO, and then in 3 years you apply again. Right? Satoshi showed you how to be a digital commodity, which is, contribute all of your tokens to the community pro rata, disappear from the industry, and never tweet again. That's how you become a decentralized digital commodity. So if Ethereum were to apply to be a digital commodity, the logical response of the SEC would be, okay, disband the ETH Foundation, disband Consensus, contribute all your tokens pro rata to the rest of the ETH community, and stop changing the code, right? And walk away from the thing, and then we'll consider it in a few years, right? That's how you become decentralized. And maybe someone can get there, but right, there aren't that many that'll get there right now. So there's going to be a handful of digital commodities in a properly regulated, registered world, and then the rest is like they're digital securities. So you want to sell a exchange token, or you want to sell a Solana or Cardano or Ripple or whatever these tokens are. Well, you register them as securities, and then the SEC says, well, okay, well, file these other 100 pages of disclosures and get an auditor and start publishing your audited results, right? And then trade with and sign up to Sarbanes-Oxley type restrictions. And then you'll have the same securities restrictions as anybody else. And then the last idea is like a digital token, maybe an NFT or something. If Katy Perry wants to sell a Katy Perry token, or Tom Brady wants to sell a Tom Brady token, well, there's nothing unethical about trying to sell your token as long as it was a registered token and you made the proper disclosures, like there's only ever going to be 1 million of them, and then you have to sign up to criminal civil liability if you lie, right? And then you get audited, and you have to publish a quarterly result saying, yeah, there's still 1 million, and this is what it does, and you've kind of taken yourself public and securitized yourself. So right now, we are sitting in this particular interesting part of the economy, right? The regulatory environment is got a big question mark over it. We are twisting in the wind. Uh, no one, the SEC has not published a methodology to register a digital security, a digital token, a digital currency, or a digital commodity. That is the elephant in the room. There is, and so the reasonable, intelligent criticism of the crypto industry of regulators is the regulators have not given us a way to register our assets. And because there's no way to register assets, if you read the securities law literally in the United States, there is only one ethical legal asset that you can buy and trade, and that is Bitcoin. The reason MicroStrategy only has Bitcoin is there is really only one asset which is clearly a commodity and not a security, and therefore that's the only thing you can trade. So if every crypto exchange was to adopt that stance now, they have to delist everything but Bitcoin. And of course, that's why they don't want to do it, because you couldn't trade Tether, you can't even trade Circle, you can't trade anything. They're all securities. And they are securities by the Howey test because they're obviously investment contracts, because there is a central issuer. Now, I leave aside this intellectual debate as to whether Litecoin or some other Bitcoin fork or some random decentralized proof of work token is also a commodity. It has not been established, right? The only thing we know that is established is Bitcoin is sufficiently decentralized to be a commodity. So we are twisting in the wind right now. The regulators have not given a method to register digital tokens, digital securities, digital currencies, and digital commodities, and so that's a problem. That means there's no way to operate a digital exchange, either a DeFi exchange or a CeFi exchange, because there's no compliant asset to trade on any of them other than Bitcoin, right? And so that is, if I'm arguing for the crypto industry, I would say the regulators need to give us a way to register our assets, and then they need to give us a path forward. There are two paths forward, Archie. There's a regressive path forward, and there's a progressive path forward. The regressive path forward, the most conservative, is you can only trade digital commodities, and I'll designate Bitcoin, and I might designate 3 others, and maybe I'll designate a stable coin issued by a publicly traded company in the US or an FDIC insured bank. Okay. That gets you to about 6 to 12 assets that can be traded on any kind of digital exchange in the world, right? That's the regressive move. That collapses 99.9% of everything. Okay. And that's the worst case if the regulators move hard regressively. The best case, the progressive move, is we're going to give you the ability to submit your stable coin as a digital currency, and you can issue a digital euro, a digital yen, a digital dollar. Tether can register. Everybody else can register. When you go through a registration, we're going to tell you what you got to do to remediate. We might fine you for something you might have done. We might tell you you have to divest yourself of some other business line, or if it's too centrally managed, we might tell you to divest something. This is just like antitrust when you try to merge two companies together and they say, you can buy that company, but you can't have their banking branch in the UK because you would have a monopoly on banking in the UK or a monopoly on something. So a path to register would change the world. And let's say you could register a digital commodity. Well, let the 100 most ethical, decentralized digital assets try to register as commodities. 90% of them will probably get knocked down. There might be a route. Again, like if you started Yo-Yo Coin and you gave it to the world and you disclaimed any beneficial ownership of any of Yo-Yo Coin, and the protocol was so simple that there were 100 development teams that were developing for Yo-Yo Coin, right? And you were attesting legally that you don't have any backdoor, and if you could get through that that analysis and pass the Howey test or fail the Howey test, then yeah, maybe Yo-Yo Coin becomes a digital commodity and you get commodity status. Doesn't mean it'll be successful in the market, by the way. You know, probably like Bitcoin Cash and Satoshi Vision, they crash against Bitcoin because the weakest commodity looks like silver to gold, and silver gets demonetized. But in theory, you could create some kind of digital commodity and register it. The real action would be on on digital currencies, where there would be a bunch of digital stablecoins launched to compete with Tether and Circle, and then there'd be digital securities, and you would see all these exchange tokens and all these other affinity tokens. Maybe they're digital securities if there's a company backing them, right? If you launch a token with a lot of functionality, like smart contract, DeFi functionality, and there's 100 developers, it really does look like a digital security. If there's a CEO and you're going to do hard forks every 6 months, you would think Solana and Ethereum, they both look like securities because they're software companies attempting to ship functionality for the next decade, right? Vitalik's roadmap is a decade worth of work. That is a software company that's going to require billions of dollars of software engineering to do it. So you would need to register those as digital securities, and you would need quarterly filings and 8K filings. When you fire half your software engineering team and you print another 100 million of your tokens, you have to file an 8K, right? You have to tell the world that you're changing, right? That's material information. So that would be another type of digital asset. And why would you want digital securities? You're like, well, why don't I just take the company public? Well, the difference is MSTR trades from 9:30 in the morning till 4 in the afternoon, 5 days a week. And a digital security, in theory, could trade 168 hours a week. So the truth is, a digital security is superior to an analog security, because a digital security you could carry around in a crypto wallet. You could distribute it to 8 billion people. You can take if I own $1 million of Apple stock, it's an analog security, and I have to DTC it around. It takes 48 hours to move it. There's a monopoly. There's only one network to move it on. It trades on NASDAQ. That's a monopoly. It trades in a cartel banking system. I can't get a loan on it from anybody other than a single prime broker. So my prime broker is monopoly on yield, a monopoly on lending. And so analog assets are trapped in the 20th century world. Digital assets could be unleashed to the 21st century world. And I would think even if I got a software company, I'd rather it be a digital security than an analog security. If the SEC gave people a way to apply to be a digital security, wouldn't you think that Apple stock might be better as digital Apple? Like if Apple stock was digital, I could move it on an Android phone in a chunk of $37 worth to someone in Nigeria, and they could own a chunk of Apple. So you can give property rights and ownership in any of, there's 10,000 ETFs, there's 10,000 publicly traded companies that are fairly well known. There's 10,000 cryptos. That's 30,000 maybe digital securities. that you might actually take public, and you might trade on what we think of as crypto exchanges right now. Binance once listed MSTR as a token to trade on Binance, and it traded 24/7, 365, and the German regulators made them shut it down, right? Because Nasdaq's got to have monopoly on MSTR stock trading. So it's kind of silly, because at 8 o'clock at night, if Bitcoin goes up by 20%, MicroStrategy is going to gap up the next morning at 9:30 a.m. But you can't trade on that. So we create these inefficiencies because the analog security market is disjointed from the digital security market. So let me move on to the last thing, digital tokens. Look, if Katy Perry wants to issue a digital token, or some artist wants to issue an NFT, they don't want to spin up a company. They shouldn't have to spend $20 million in order to do the legal and the accounting work to take their token public. But, if Katy Perry wants to give out 1 million Katy Perry tokens, and if Katy Perry's going to say, my fans get to come to my chat room and they get special treatment at my concerts, and I'm going to release special songs for my Katy Perry super fans. If she wants to monetize her fans via token, the real promise of the digital asset industry is I ought to be able to spin up that token in a day, and I ought to be able to let people put it on their Android phone and trade that token to other fans, just like I trade a coupon. And it would be the thing that's exciting about NFTs is the creators can monetize their own brand. It's not a bad idea to give artists and actors and musicians and philosophers their own brand power back to them. That's not a bad idea. The bad idea is pursuing it in an unethical, unstable, economically unsound fashion. So when I give someone the dollar and they live in Venezuela, that's a good idea. When I put it on the Tron network or Ethereum or FTX, it's a bad idea, because I'm making them trade the asset on an unregulated, opaque exchange that's not trustworthy, or I'm making them buy an unregistered security token which has been manipulated, via inside trading, right? So it's the approach that is bad. It's not the idea. So if the industry wants to move forward, the progressive, inspirational way to move forward is we want to issue 100,000 digital securities, and we want to tokenize Apple stock and Facebook stock and MicroStrategy stock. I want to tokenize every ETF. Like, I want to tokenize BITO, or I want to tokenize the S&P index. I want to tokenize the commodities index. Why can't I buy a piece of oil? You could there are 10,000 ETFs. You could tokenize them all. You could tokenize all the publicly traded companies. You can tokenize crypto companies that want to launch smart contract or DeFi protocols. You could tokenize them. And when I say tokenize, I really mean make them digital securities. You could go to 100,000 celebrities and artists and let them all issue their own digital token, which is a lot less than a security, because they're not going to run a company. All they need to do is attest that they don't defraud their fans by inflating the token. But there might be a light form. And in a light form, maybe there's 1 million light tokens. They're kind of like security lights. Like, you can't afford to spend 25 million a year on accountants and lawyers, to issue, a little artist token. So that's why Bowie bonds were the securitization of David Bowie's library. There are probably, the top 100 musicians might have been able to do that, but the rest couldn't. So So the idea of digital assets is do everything 1 million times faster, 1 million times cheaper, 1 million times better, and give property rights to 8 billion people. And that's the virtuous idea in the crypto industry when articulated by ethical actors that are adults, just ethical actors, right? That understand it. That's the idea. The problem in the crypto industry is all those ideas have been pursued by a combination of unethical actors or irresponsible technologists or just irrational economists. They've just been pursued in an unstable, unethical, like non-viable, irresponsible fashion. And FTX is the poster child of that. So, big picture, there's three paths forward for the industry. One path is status quo. We continue to twist in the wind while the SEC and CFTC pursue very slow enforcement actions against crypto scammers. And the problem with those actions is if you sue someone civilly and they're counterfeiting money, then they could just keep counterfeiting money to defend, and it takes 4 years before you get a result, right? That's one path. That has been the status quo for the past 2 years. And that's not a good path because the same crypto scammers that are using counterfeit money to defend in civil court are using counterfeit money to lobby in DC and try to corrupt the politicians and the political process and the laws. That was where we were before FTX's meltdown. I don't think we're going to stay in that status quo situation because I think people realize there's a lot of egg on their face, and they can't afford to take another 2 to 4 years or 8 years to clean up the industry. So that means we've been kicked out of the status quo to either the left path or the right path. The left path is very regressive. We're going to, I'm going to issue a memo, everything with an ICO, everything with a pre-mine, everything with a controlling foundation, everything that looks like a security, it all has to be shut down. And then that's carnage. 99.9% of the industry dies. That's like the asteroid smacking into the Earth 80 million years ago, and that'll just wipe out everything other than Bitcoin, right? The other, right? And by the way, that model is like institutional grade investors buy Bitcoin with cash from traditional banks. That's via registered traders. That's how MicroStrategy spent $4 billion to buy Bitcoin. We did it that way. That is the regressive path forward. And the progressive path forward, and this is an opportunity, Archie, and there's probably there's one person in the industry that has the ability to do this, and that would be the chair of the SEC, the single pivotal, most powerful person in the crypto industry right now. The chair of the SEC has the power to say, I'm going to give you a registration path for digital commodities. I'm going to give you a registration path for digital currencies. I'm going to give you a registration path for digital securities. And I'm going to give you a registration path for digital tokens. I'm going to define this is what they are. You've got, this is how you apply. If you're going to be, and I'm going to allow digital exchanges to operate trading these digital assets. If that happens, there is a path for 100,000 different digital assets, over a decade from now, not now, but you would have 100 assets, then 1,000 assets, then 10,000 assets, then 100,000 digital assets. They would be trading on 24/7, 365 digital exchanges that kind of look like Binance or look like Coinbase, but especially they look like Binance. I mean, Binance is kind of like doing everything everywhere in the world. And so the exchange would look like that, but they would have to be regulated, and they'd have to be transparent. And those exchanges would have to, in essence, come public in the United States, disclose all their assets, all their liabilities, all their conflicts of interest. And then they'd probably have to divest themselves of their conflict of interest. Like you can't trade against your customers, right? You can't issue your own security and then trade your security, because it's pretty clear right now that Sam Bankman-Fried could manipulate the price of FTT to be any number he wanted it to be. He wasn't making $1 billion a year. He was moving the price of FTT up $3 per year using 10 or $100 million of borrowed money from his customers. And so in that world, you can't trust anything, right? The only thing you can trust is when the entire market is decentralized and no one has the leverage to manipulate it. So I would just pause right there and I take your question, right? The summary is the future of the industry is in the hands, I think, of the SEC right now. And the chair has said 6 months ago, a year ago, we don't have the legal authority to assert jurisdiction offshore, and we don't necessarily have the legal authority to get in these other areas. So the SEC has been fairly diffident, right? Fairly hands off and non-committal. But I think that this crash with $150 billion meltdown, I think this kind of is the crisis that basically creates the opportunity for the SEC to step up and be much more authoritative and assertive, for good or for bad. And that's where we are.
Well, when I spoke to some policy experts in the context of the ETF rejection, or Grayscale's application for a Bitcoin ETF, when that was rejected, they were of the view that we wouldn't get a legislative framework within 12 months in order for an approval to take place. Do you have a sense of how long a legislative framework might take to be introduced before some of these, I guess, progressive changes can take place and the industry can move forward? Because it does seem to me that quite a lot of the established financial industry would like to get involved and are getting involved, but also many of them are put off by the lack of regulatory clarity as well. So, do you have a sense for the time frame?
I think, first of all, I think that DC has been paralyzed on this issue, and there's been a dysfunctional relationship between the industry and the policymakers and the regulators on this for the past year. And I think that right now the DCCPA, which was the legislation sitting in front of the Ag Committee, that's dead on arrival. I think the crypto lobby is paralyzed. I think that Congress is substantially paralyzed right now. I think that the crypto bros, right, the ones that want to promote unregistered securities via offshore exchanges, of which SBF is the poster child, I think they're the losers. I think the SEC is the winner. I think that ultimately, if you want a solution to this, it will not come through the legislative process anytime soon. I think that the solution to this will come from decisive leadership from the regulator. And the regulator here, which is the quarterback, is the SEC, right? The chair of the SEC is the quarterback. So I really don't think any of the other policymakers are, sophisticated enough at this point to lay out that taxonomy I just laid out. If I walked up to any congressman, any senator, and I said, define a digital security, a digital commodity, a digital token, and a digital currency, I just think they'd say, what? And Archie, I don't even think most of the people in the crypto industry are sophisticated enough to say what I just said. I've watched all the leaders in the crypto industry. They haven't laid out a taxonomy of a token versus security versus a currency versus a commodity, and what would be the rules governing the trading, and registration of any of these things. And so the industry has fallen. It can't get up. The only person, right, the only person with simultaneously the power, the moral authority, and the intellectual strength and the intellectual clarity to fix this is the chair of the SEC. Now, will he do it? Unclear. I think there's a lot of people in the industry that have been trying to undermine him, and I think that it's very political. Like there are politicians that will undermine the chair of the SEC, and I think it's very political. But if you're going to get a progressive move forward, if the industry is going to progress, someone's got to lay out the taxonomy, lay out the registration process, give people a timeline, and drive this thing forward. I rather think that probably the policymakers would just breathe a sigh of relief if the SEC just published a 10-page or 20-page paper just telling everybody how this is going to work, right?
And what's preventing them from doing that? I mean,
But by the way, like to make a point on the DCCPA, if you look at that legislation said, well, we kind of think that crypto is commodities, and we think that the CFTC should regulate it because they're commodities. But if they're securities, then the SEC should. But there was no mechanism to get registered as a commodity or registered as a security. There was no way to figure out what was what. And they said, yeah, we kind of think that Bitcoin and ETH are commodities. Okay, well, one of those two things is obviously not a commodity, right? So that entire bill was intellectually defective and ethically defective, right? And the chair of the SEC at that point said, in a very politically correct fashion, he said, I have concerns because this is light registration. It's being pushed by, the people that just crashed. Sam Bankman-Fried was lobbying for this for obvious reasons. It's light regulation, but more importantly, it undermines the investment protections in $100 trillion securities market that are 90 years old. Those were his words. And what he meant by that, Archie, was the SEC Act of 1933 said you cannot lie, cheat, or steal when you sell securities to the general public. That's what the act said. You cannot cheat investors. If you're a security, you can't cheat investors. There's $100 trillion of securities. Everything in crypto is a security other than a handful of things. The vast majority of things are securities. And so this legislation was attempting to create a backdoor to allow securities to masquerade as commodities. And that's a moral hazard. Because if you actually had a backdoor for securities to masquerade as commodities, why wouldn't everybody with a security just want to call it a commodity and duck any civil criminal liability or any disclosure liabilities? And the logical thing that happens next is everybody taking their company public doesn't take them public as a publicly traded security. They just take them public as a token. Oops, I just realized I just invented the crypto industry for the past 5 years, right? That's what's going on, right? All of these crypto tokens are in essence raising money by ducking securities laws. And that's a process that wrecks the entire securities market and wrecks the financial markets. So what we had was a problem. I think that the lawmakers put forward legislation written by lobbyists. The lobbyists are substantially controlled and influenced by the crypto industry and guys like Sam Bankman-Fried. And the crypto industry doesn't want securities law. They want to duck securities law. 80% to 90% of all the crypto lobbying is to prevent securities law from being applied to the crypto tokens. So I don't think you get a quick solution via the political process or the legal process. I think that you may get a quick solution, which is either progressive or regressive from the SEC. You may, and I think that we're just going to have to wait and see. That's basically the most interesting story to watch right now.
Well, the interesting thing for me right now is watching. There's almost kind of like this parallel lane of activity with all of the major custodian banks in the United States, who are ready now to custody Bitcoin for their customers, both institutional, retail. We saw Fidelity offering it to retirement savings accounts as well. So there's a whole bunch of activity going on as if regulation is not required. So I'm just wondering from the official regulatory point of view, what needs to be the next domino to fall before we can sort of clear this logjam of activity?
I think we can already see big organizations, BNY Mellon, Bank of America, Fidelity, they're already moving into Bitcoin trading and Bitcoin custody, and so that that's happening regardless. If we come back to my three scenarios, the status quo twisting in the wind, or the regressive or the progressive scenario. In all three of those scenarios, Bitcoin is going to be traded and custodied with regulated entities, with banks, regulated financial players. You're going to get your Bitcoin through Block, you'll get it through a Coinbase that's a publicly traded, regulated company. You'll get it through a NYDIG. You'll get it through a Fidelity. You'll get it through a whatever bank. So that's happening regardless. If you get the regressive stance, you will have a small digital assets set of exchanges or crypto exchanges that trade, that'll have very narrow focus. They'll all be regulated and registered, and they will coexist with all the self custody solutions for Bitcoin, and probably self custody solutions for whatever other assets are registered. And then in the most progressive case, if the regulators decide to actually lean into this thing and give people roadmaps for all these other digital assets I just laid out, then you'll see a few of the strongest players cross the chasm. Like a Coinbase crosses the chasm when they delist and they don't list their own token, and they come public and they start to, file registration statements. A Circle is crossing the chasm. It's possible for a Tether or for a Binance to cross the chasm, and get registered and get regulated. The question really is, how will the regulators approach that, and do they make that easy or hard? I mean, they can literally say, like they can say, I'll give you an example of Ethereum crossing the chasm. Okay, everyone give up all their Ethereum that got it in the ICO or the pre-mine, and disclaim all beneficial ownership to all of your Ethereum and stop interfering with the protocol. And if you can prove that you did that, then maybe it's a commodity. If you can't prove you did it, well, then disclose everything you've done and become a security, right? And so it's possible to cross the chasm if the regulators create the transition mechanism. And so really this comes down to, what is the SEC going to allow? Because the SEC is they're going to set the tone for every other regulatory agency in the US, and that'll set the tone for every regulatory agency in the rest of the world. and look, if you're a Bitcoin maximalist, Bitcoin doesn't care. You don't care, right? If you self custody, run your own node, and you're Bitcoin only, none of this matters to you, except for one point. The one point is, there's $500 trillion worth of money locked up in the traditional financial system. And to the extent that this gets normalized, and you can start to funnel money into 401ks at Fidelity, and if Goldman Sachs and JP Morgan start to handle this, and if Bitcoin starts being viewed as a neutral, permissionless, non-sovereign store of value, uncorrelated asset, then the way it matters to you is that hundreds of billions and then trillions of dollars are going to flow into Bitcoin, and Bitcoin's price is going to go from $16,000 a coin to $160,000 a coin to $1.6 million a coin to $10 million a coin. That's how it matters to you, right? If it's just like when you're the survivalist if you're the survivalist and you've got all your own guns and all your own medicine and all your own food and you got your cabin and you're ready to go off the grid for a decade, okay, you're going to be fine if the rest of the world melts down. It's just that the entire world economy and what the world exists or the sum total of humanity is going to be 0.1% of what it was, and you'll be in that 0.1% and you'll be fine, right?
Yeah.
But if the world doesn't end, right, humanity will be 10,000 times more successful. Bitcoin is going to be a large portion of whatever humanity is, right? It's going to grow to be 10% of the liquid money and then 20% and then 30%. So ultimately, if I happen to believe that our goal, our view here ought to be let everybody embrace Bitcoin the way they want, and the hardcore, maxi should embrace it with complete self-sovereignty. But, if the mayor of Miami Beach wants to embrace Bitcoin and put half of the Miami Beach treasury in Bitcoin and custody it, at BNY Mellon or Fidelity, and that's the only way that the mayor of Miami Beach can custody Bitcoin, then yeah, I'd rather have Fidelity and the mayor of Miami Beach custody Bitcoin, right? And ultimately, just like MicroStrategy, like our choices, right? We can either use an institutional grade custodian and buy 4 billion, or we can't buy any. Right? It's a very stark choice for us. And my, any, 80 something octogenarian retiree can either move 20% of their assets into Bitcoin in their retirement plan with a trusted third party, or they can't. So we're moving toward that world. This is going to accelerate the education. It wipes out the bad actors, or there may be a few more bad actors left. This is the fourth, the third wave of wiping out bad actors. There might be a fourth or a fifth wave, but we're doing a pretty good job of cleaning out the bad actors in the industry, and we're doing a pretty good job of pointing out the foolishness of trading air tokens. And this is this is a great advertisement for the value of a truly decentralized asset and the great advertisement for proof of work. And so I think that that's a good thing. I think that we need the help of the regulators. Bitcoin's been in a dysfunctional relationship with crypto and the entire industry forever. And it's also been in a dysfunctional relationship with politicians. And I think that this kind of helps us maybe to resolve that dysfunction, because now I think it's easier to speak with clarity and credibility about what's really going on, right? It's really tough when Sam Bankman-Fried is sitting in front of a bunch of powerful politicians that he just gave $10 million to, and then he's preaching about proof of stake and how it's environmentally friendly, and how he's got a crypto solution that's environmentally friendly and the like, and then he's giving them millions of dollars and they're nodding, and then he's giving millions of dollars to lobbyists and they're nodding, and now we can point out that that counterfeit money driving these narratives and corrupt money driving these narratives doesn't make them right. I want to make one more point, Archie, that I think is really important right now. People keep asking, what backs Bitcoin and what's the difference between Bitcoin and FTX? And let's just take this example, the FTT token. The FTT token was backed literally by nothing. It was backed by a couple of $1 million a day of wash trading with stolen money by one person. That's what backed FTT. Like an air token, no security, backed by securities fraud. And eventually it got to be $8 billion worth of collateral. And Bitcoin, on the other hand, Bitcoin's backed by nearly 300 exahash of hash power, and it's backed by 10.6 gigawatts of energy. Now, I say those words but people don't even, it doesn't register with them what those words mean. So let me say it a different way. The United States Navy has 53 Virginia-class attack submarines that have 30 megawatts each. It has 14 Ohio-class ballistic missile submarines that have about 45 megawatts of power each. It has 11 nuclear-powered aircraft carriers with about 195 megawatts of power each from their nuclear reactors. It's got 17 cruisers that run about 60 megawatts each and 62 destroyers that have something like 30 megawatts each. When you add it all up, right, the entire Navy, the nuclear Navy, it's running like 4.5 gigawatts. 4.3 gigawatts of power. Okay. So the Bitcoin network, we used to say that the US dollar is backed by the strength of the US Navy, by the power of the Navy. Well, it is. And now you know what the Navy is. The Navy isn't 10 gigawatts. Bitcoin is 10.6 gigawatts. It's like double the energy that powers the entire US Navy. Another way to think of it is as a full-on nuclear power plant might generate a gigawatt, a massive one. It's like 10 and a half full-on nuclear power plants running all out, but it's better because it's distributed everywhere in the grid and you can't identify where that energy. It's more distributed than the Navy. It's more distributed than the nuclear power plants. You can't stop it. And when you combine that, which is a wall of energy, with another idea, which is 300 exahash, and that's computing power. That exahash is driven by silicon ASICs that have, when we last checked it, it's 2,200 times the computational advantage of general purpose computers. So it's a 2,202x machine or silicon ratchet that's running. And what does that mean? Well, that means that how much computing power do I need to catch up with the Bitcoin network? And the answer is all of it. Like how much computer power? All of it, right? If you took all of the computing power of Microsoft and Azure and AWS and Google and Facebook and everything, all of it, you're still not catching up, right? So what we've established is, by the way, how much Navy do you need to catch up with Bitcoin? All of it. All the navies in the world maybe are starting to approach the power of Bitcoin. And then all of the computing power of the world isn't 10% of the power of Bitcoin, wouldn't dent it. And then when you look at the cryptos, that attempt to compete, you've got a handful of proof of stake networks. And the last time we calculated, said, well, if Bitcoin is Mount Fuji, this next one is like a grain of rice. And the other one is like a housefly. Like you might, the biggest proof of work network other than Bitcoin, and it might be a toaster compared to Mount Fuji. And that's the good ones, right? That's the few dozen that the dozen that might actually have something backing them. And then when you go to the air tokens, the proof of stake tokens, what are they backed by? They're backed by 3 people, if you're lucky, 8 people, right? 2 people. FTX was, and SRM and SRM and FTT was backed by one person's whim. And so this is going to be such a teachable moment, right? So vivid when people say, what is responsible? Well, I want all the computer power in the world and all of the energy that the US Navy could muster, and I want it to be distributed across millions of nodes to defend my money. That's what Bitcoin is. And what is the rest of crypto? The rest of crypto is what Sam Bankman-Fried was, and what FTX was, and what FTT is, And, Satoshi said, don't trust third parties. Well, he's right. It's like if you have a bank in the Western world and if there's an army of lawyers and an army of accountants, and if there's an army of Sarbanes-Oxley controls, you still shouldn't trust them. But the point really is, if you absolutely must trust a counterparty, you would like for it to be the counterparty that's run by a bunch of people that are worried they're going to go to jail if they screw up. With when I signed that Sarbanes-Oxley statement, it's not just me signing. It's like there's a person behind a person behind a person behind a person that's looking, and they're all thinking this entire thing is going to crumple. And there's no way that like if I had said, hey, I want to send $1 billion of Bitcoin to FTX, my entire accounting department would have resigned. My board of directors would have resigned. My CFO would have resigned. My GC would have resigned. And the auditors would have resigned. You understand? It's like the advantage of being in a regulated entity in the United States is if you have an honest actor surrounded by honest actors, they're keeping each other honest, at least, because everybody's looking over everybody's shoulder. It doesn't make the system work as well as Bitcoin, but it makes the system work a hell of a lot better than FTX. The problem in FTX is Sam had nobody to answer to but himself. And your tip-off was like when one or two, he had two executives that resigned, Archie. The head of FTX US, right, and the head of Alameda, they resigned. That was your tip-off, but he only had two. And so, ultimately, this is this maturing moment. Bitcoin is, sorry, not Bitcoin. Crypto has got to move from its youthful, Wild West, exuberant phase to it's got to be grown up. And the future of the industry is registered assets on regulated exchanges traded by institutions in bulk, spreading throughout the world. We know that's the future of the industry. We just don't know how big the industry is going to be. We don't know whether the industry is just Bitcoin and maybe a half dozen other things or a dozen things creeping into it, or whether the industry is 100,000 things. We don't know that because that really is in the hands of the SEC right now to determine, more so than anybody.
Yeah, look, I don't think any of the aspects of crypto will go away. I mean, I'm just looking at the attendances in spaces, and they're crammed, often multiples of the spaces discussing Bitcoin. So I think there's a huge appetite for everything that's going on in that space. The question, as you've said many times, is how that is going to actually be conducted. And at the moment, it's not being conducted ethically at all. And the industry needs to find a path towards that. Michael, I wanted to ask you about FASB because I know your company has been subjected to what I would call, unfair accounting regulations, but we seem to have some traction on that front.
Yeah, I think we got a good result about a month ago when FASB met and voted 7-0 to pursue a strategy of fair value accounting for Bitcoin. And I think the traditional accounting was indefinite and intangible, which meant you could only write them down, you could never write them up. And fair value accounting means that you can write them down and write them up. So fair value accounting will fix the balance sheets of any company that holds Bitcoin. They will fix the P&Ls. They will separate investment losses and investment gains from operating losses and operating gains. They will allow you to compare financial performance over various periods, so you can see whether you had more or less assets a year from now, a year ago than you have now. And they will allow people to compare financial assets across different companies. 10 companies that have the same amount of Bitcoin could look like they have a different amount of assets under indefinite intangible accounting, but under fair value accounting, they will all look like they have the same amount of Bitcoin. And so it'll clean that up. I think the elephant in the room here that you would want to point is fair value accounting only works if you can establish the fair value of the asset. And the only asset, the only digital asset, which I think has a fair value right now, or that you could even argue as a fair value, is Bitcoin, because Bitcoin is a digital commodity that nobody controls. It's volatile because it's manipulated by the rest of the crypto industry and the macro industry, and we already know why it's volatile if we go back to the FTX story. But it is a fair asset that you could establish a fair value. I actually think that the other digital assets are digital securities, and until they're properly registered, trading on regulated exchanges, I don't think you can establish a fair value for them. For example, it would be a disaster to apply fair value accounting to the FTT token, right? So, because it was a manipulated air token. So I do think that what'll happen next is they will lay out more guideline about how you disclose these in tables. I think they'll have to lay out guidelines on transitions. I think there'll be a lot of community comment. I'm sure that this crypto carnage at FTX will cause them to stop and consider which assets should actually be deemed digital assets that get a fair value. And I think the responsible thing would be just Bitcoin and nothing else until we've made more progress. But I think that those are all the elements to consider. And the timeline, we'll be into the middle of next year, to the end of next year, before any of this stuff might take effect, because they're going to have to give more guidance on disclosures, more guidance on transition. They're going to have to get feedback from the community, work through issues. And so I wouldn't expect to start to see changes in reporting in the next 12 months, but I do think it's auspicious for Bitcoin as an institutional treasury asset for sure.
Michael, you've been very generous with your time so far, but I just want to ask you one last question, and that's about Bitcoin, the price, and the market cycle that we're in. How do you see us leading? How do you see the path out of this current sort of market turmoil?
I think the Bitcoin, it goes through these boom and bust cycles, right? And we saw one extreme cycle, call it it's a seasoning, annealing, maturing process where you clear out all of the crud and you clear out the tourist and you clear out the leverage. And one was March of 2020, where people that didn't have conviction got blown out of the asset class. And Bitcoin traded a huge amount in the 4,000 range, and then it had a pretty healthy recovery back up to 8,000-9,000 or something pretty quickly thereafter. And I think now we're something like 28 months later, or 2.5 years later, and we're seeing a huge amount of leverage getting cleared out of the system at the 16,000 level, so 4x where we were 2.5 years ago, and I think there's a massive base of support coming in, and people that were over levered, or the tourists, the people that don't understand Bitcoin and they're not believers, they're getting wiped out. The traders getting wiped out. But Archie, I think it's pretty important to make sure you've got perspective on what's going on here, because people can get caught up in the trading in the moment. When the market closed yesterday, right in the middle of the crypto carnage. If you went back and you looked at performance of every asset since MicroStrategy entered, we got into Bitcoin in the summer of 2020. And August 10th of 2020, we had not bought a dime of Bitcoin. Okay, if you go from August 10th of 2020 to market close yesterday, silver is down 25%. Gold is down 12%. NASDAQ is up 3.5%. The S&P is up 18%. Bitcoin is up 42%. So in that time period, Bitcoin outperformed NASDAQ by a factor of 10x, more than 10x, right? It more than doubled the performance of the S&P. It utterly destroyed gold. It utterly destroyed silver, right? For that matter, Archie, not to toot my own home, but even MicroStrategy is the same thing, a 40% return. We've tied our wagon to Bitcoin, and even though we're on a roller coaster, Bitcoin is outperforming, and that basically stabilizes our balance sheet. Let me give you one more stat. If you go back to the middle of summer of 2020, and you said, oh my, what am I going to do? I better buy a digital monopoly. If you had bought Amazon in the summer of 2020 and they have a monopoly on home delivery and a monopoly on cloud computing, they're down 37%, Archie. Netflix had a monopoly on home streaming, down 36%. Microsoft has a monopoly on all enterprise software in the world, must have, I don't know how many, 40 million companies as customers. Microsoft is up 16%. Google, a monopoly on YouTube and all search, they're up 32%. Apple, a monopoly on everything that moves on a phone, up 33%. Every big tech company got beat by Bitcoin, Archie. Bitcoin beat all big tech companies. Bitcoin beat every major asset class. And I am measuring the performance after 3 successive crypto crashes, right? And the $15 billion FTX meltdown. And, after the Fed has jacked interest rates by a factor of 40 on the short term. And so, with all these things, people, they can choose to get really worked up by fixating on the near term. But if you haven't spent 10 hours studying Bitcoin, you probably shouldn't own any of it. You're going to actually panic sell it one way or the other. If you spent 10 hours thinking about Bitcoin, you can see that it's the world's only non-sovereign digital commodity scarcity, right? That can serve as a deflationary currency. It's the only one. There's nothing else. And if you did that work, you would say, well, it's obviously something I should hold for a decade. And if you're looking at the last 2.5 years, it's a screaming winner. Yeah, but there's been 3 crashes, and we're in the middle of the worst crash. After, Bitcoin soared to 69,000, crashed down, soared to 65,000, crashed down, went up to 45,000, and crashed down. We're in the worst trough of the 3rd crash, and it's still destroying the NASDAQ by a factor of 10. And so the conclusion is very simple, right? If you live in a developing nation, you hold enough money for 4 weeks in the local currency, like the peso or the bolivar or the naira or whatever, and you hold enough money for 12 to 36 months in the dollar. And if you're going to hold money for more than 4 years, for sure, right? If you're going to hold more money for 4 years to 40 years, you put it in something which is the strongest property you can, and Bitcoin happens to be the strongest long-term store of value you're going to find. You shouldn't judge it until you've waited through a 4-year cycle at the very earliest, but you probably shouldn't buy it unless you've studied enough to commit to holding it for as long as you can reasonably hold it, because it's the one thing that should be holding value 100 years from now, and nothing else in the world should hold value 100 years from now. So I think that if you look at the world consists of people that understand it, and they're hodlers, and they're holding Bitcoin, and they're dollar cost averaging, and they're buying more. And if you're one of those people, Bitcoin's on sale for you, right? Bitcoin's on sale for everybody that buys it. Whenever you get freaked out, oh my, someone's selling Bitcoin, just remember someone's buying Bitcoin. There's someone that's buying from the seller, right? And so if you've done the work, then there's nothing wrong with this. What you see is Bitcoin is just strengthening, becoming more vital, stronger, faster, harder, smarter, right? Bitcoin's just getting better. And the competitors to Bitcoin are blowing up right and left. Every crypto promoter is blowing up. Every air token is blowing up, right? The runway for all these, these wildcat crypto banks is going away, right? The mainstream world, mainstream media, mainstream politicians are getting educated, and they're starting to realize that Bitcoin's a good thing. We just had a senator on the floor of the, in the Capitol, standing on television saying Bitcoin is different, right? No one's standing up saying this air token is different. No one's going to, right? Because it's not going to happen. So, take the long view, do your job, do the work, right? Go to work, make money, manage your finances responsibly. When you have excess money to put in the piggy bank and you want to save it for the long term, for your retirement, for your kids, for a better life, you roll that into Bitcoin. As for the rest, the rest is the entire digital assets industry. It's a dynamically evolving industry. There's a lot of uncertainty. There's a lot of competition. There's a lot of opportunity, and there's a lot of hazard. And if it's your full-time job to focus on that, then that's what you're going to do. My only advice to people in the industry there's a lot of people in the industry that they create unstable products, like a proof of stake network where you can redeem your coins in 48 hours is an unstable network. It's got a natural frequency, of 1/100th of a year. It will literally shake itself apart under volatility, right? It will blow itself up like Terra Luna melted down. So staking networks with a short natural frequency are just bad engineering constructs. The only reason Ethereum is not shaking itself apart right now is all the ETH is locked up forever, right? If they unlock the ETH, right, it could shake itself apart, right? Bitcoin is a is a well-engineered network with a 2200 to 1 silicon ratchet with a natural frequency of 8 years. That is to say, it's something on the order of 800 to even 1,000 to 8,000 times more stable than these proof of stake the proof of stake token networks. So if you're going to be in the industry, build well-engineered things that are stable. Then make sure they're ethical. If you're creating a security, register the security, right? Don't try to masquerade that the security is a commodity, because it's unethical, and eventually that turns every honest person on the planet against you. And there are more honest people on the planet than dishonest people on the planet. And then finally, make sure it's economically sound, right? 21 million capped coins and you can't make any more. That's economically sound. When you keep screwing with the economic policy, or it's an inflationary asset, you're going to end up creating silver versus gold or copper versus silver. And pretty soon you're going to have 10 coins or brass pennies. They're going to demonetize because they're not worth anything. And that would be advice to anybody, whether you're in a traditional business or the crypto business. So that's all I have, I think. Any final questions for me, Archie? Or
No, I was going to ask about FUD, but I think I've done enough to dispel all that bullshit on your behalf anyway. So I don't really, unless you want to talk about it, but I don't really think we need to go over it again. And every time the price drops, the rumors pop up again. But I think we'll let it pass this time.
I
thank
think,
you very
Archie,
much.
the
Sorry,
one
go
thing
on.
worth saying on that is is a lot of people want to troll Bitcoin.
Yeah.
I mean, there
And
are a lot
you,
of
they
people
want
on
to troll
Twitter.
you as well.
Okay, so how's the world work? On Twitter, everybody wants to troll, either the person or they want to troll the asset that everybody's talking about. So if I were to say, Sam Bankman-Fried destroyed FTT, and the world's coming to an end, people might not notice unless they own FTT. But if I said Sam Bankman-Fried destroyed Bitcoin, everybody notices. You get the headline. And so people will troll Bitcoin. They will troll MicroStrategy. They will troll me, and they will look for something that they control that's going to get them engagement, and the mainstream media is going to troll it. It's like Charlie Munger. He doesn't even know the difference between Bitcoin and FTT. He probably doesn't know FTT exists. And the difference between having more energy or more power than the entire United States Navy, and having one dude, writing code to manipulate something in a box. Like, it doesn't occur to him there's a difference between the two. He doesn't have the time or the attention span. But the people that interview him, they need Charlie Munger to go on the record saying something about Bitcoin. If CNBC had said, "Hey, Charlie, tell us what you think about FTT and why you think that's not Bitcoin," Charlie would have said, "What is FTT?"
Yeah.
And that would be the end of the interview. So I wouldn't get worked up. I mean, people are going to basically equate crypto to Bitcoin. We need to keep saying Bitcoin, not crypto. They're going to equate, every leading figure to every other figure. They're going to knock them down one at a time. You just have to address the FUD, as it pops up. It's, for the most part, it's not very well thought out. I very rarely see a cogent, articulate criticism. What I generally see is a lot of people will just make an inflammatory trolling comment because they're hoping they're expecting to get engagement or reaction, and they want you to do all the work
Or they're
of
pandering to
defending
their own
yourself.
audience. Yeah, so there's quite a lot of pandering that goes on, particularly on the environmental front. It's really easy to play into the perceptions that Bitcoin is not environmentally friendly, but we've seen a whole bunch of developments in that space, and fortunately we're getting some more vociferous and very active committed environmentalists. Also, as Bitcoiners now stand up and really become much more prominent voices in the community, and at large they're taking it up to the environmentalists because they can use the same language that the environmentalists use. So
I think it's definitely worth pointing out that, as far as I can see, substantially all the environmental criticism is propaganda originated by crypto promoters,
well, it's Ripple. Let's be honest.
right? It's,
Yeah.
well, and supported by crypto promoters, right? And Sam was part of it too, right? All the people pushing proof of stake, using their air token money, they're counterfeiting money, and they're basically using the money to influence the nonprofits. They're influencing Sierra Club. They're influencing, Greenpeace. They're influencing journalists. They're influencing politicians. Right? When you donate $50 million to politicians, it does have an impact, right? They're using that. And the politicians and the journalists saying, "So what do you want to talk about?" And their answer is, "Oh yeah, we can do what Bitcoin does without destroying the environment." Oh, that's interesting. But the sad truth of all of that FUD, it doesn't come from any bona fide environmentalist. It doesn't come from any honest person. It is really guerrilla marketing by the crypto token promoters, right? And I think that the meltdown of Sam Bankman-Fried is just a reminder, right, of just how egregious it can get. What would happen if a guy counterfeited $1 billion and basically spent it to undermine Bitcoin? Well, you just saw it, right? You saw it on the arena. You saw it on the Super Bowl ad. You saw it going into the political elections. You saw it going to lobbyists. You saw it going to celebrities. You saw it, to, create there were $14 billion worth of air tokens that were manipulated fraudulently by Sam Bankman-Fried. 14 billion. So all this FUD, this is being supported by, kind of counterfeit money. And it's one of the reasons why we really do need regulation in this space. And it's one of the reasons why Bitcoiners shouldn't really be against regulators getting into the market, because the existence of a Wild West, money market without any rules makes it possible for unscrupulous actors to counterfeit money and then to corrupt politicians and to corrupt the media and corrupt nonprofits. And that's a really dark future for the world, right? If someone can use corrupt counterfeit money in order to destroy something virtuous, and we definitely need to call that out, right? And one way to call it out is pointing out the ridiculousness of the environmental argument, but the other way to call it out is to point out that all of the proxies and the advocates for the anti-Bitcoin environmental movement are all supported, paid off by guerrilla marketing arms of crypto air tokens that are unregistered securities.
Yeah, like politics is almost like war. You may not be interested in it, but if you're not playing the game, politics will be interested in you. That's for sure. So I agree with you. We need to be influential as a community, industry. We need to be influential in all spheres that determine how we relate to one another in society, and that includes politics, law, and culture as well. So, Michael, I want to take this opportunity to say thank you once again. You've been more than generous with your time at a point in the market cycle that I think a lot of people are very happy to hear from you once again. So thank you very much for coming onto my spaces. Really appreciate that.
Yeah, thanks for hosting me, Archie, and thanks to everybody for listening in and giving us your time today. And I think we all appreciate your support, and all the best. I wish everybody the best during these difficult times. If you lost money in this crypto, I'm sorry, but I also, look forward to a beautiful future for Bitcoin. And all we got to do is just spread the truth and educate the population. And I'm optimistic that great things will follow. So
Thank
have
you,
a good day.
Michael.
Bye.
And thanks to everyone who's joined in. If you've enjoyed this and you want to spread the message, this Spaces has been recorded. So as soon as I close this down, there will be a recording available on the tweet that you used to join this Spaces. So please retweet it and share it so that the message gets out there, and people can either be enlightened or reassured, whichever they're looking for. And thank you once again for your support, for following me, and for joining us in this Spaces. Thank you very much.